Islamic finance has embedded features that safeguard it against the frequency and severity of economic crisis. Strengthening safety nets through zakat, wakaf, and sadaqah, encouraging innovation and market-creating growth, and institutionalizing risk-sharing should all be part of holistic pandemic responses. Islamic finance options provide a broad choice of funding that is participative, patient, and generous. The Islamic finance industry is robust in the face of a crisis because of its emphasis on the integration of finance with actual economic activity and strong social safety nets. The ban of riba, qarar, maisir, and other trade laws guarantees that finance and actual economic operation are tightly integrated. Islamic finance has a critical role at all stages of the COVID-19 response to catalyze inclusive economic recovery. Given the importance of the Islamic financial industry in many economies throughout the world, Islamic finance will play an important part in the COVID-19 reaction and recovery. Because of their potential to alleviate hardship and satisfy the urgent needs of those who are most impacted by the crisis, zakat as well as individual and corporate generosity are sought for short-term emergency relief. Impact investment as well as Islamic asset and trade finance are important for medium-term reaction and recovery, providing liquidity and catalyzing the flow of money to firms, particularly small and medium-sized business. Long-term recovery and resilience can be achieved through sukuk and wakaf endowments, which provide long-term capital to governments and business while also contributing to long-term resilience by establishing permanent asset for long-term development.
COVID-19 has given big impact on society, especially on the poorest. Most of them can't access on financial product and also doesn't have strong support from financing institution. Therefore, how can microfinance sector overcome this issue, especially for Islamic finance institution, to achieve the sustainable development goals? Islamic microfinance can provide important liquidity and services to the poorest in action to alleviate short-term impacts of COVID-19. Islamic microfinance institution can mobilize charitable sources to support their borrowers, drawing on Islamic finance instruments such as zakat and sadaqah. Besides subsidizing loan payments of distressed borrowers, this also can support capital and operational expenditure of micro enterprises. Then, Islamic microfinance institution should confirm the Sharia principles and requirements and embody the intrinsic values of the Maqasid Sharia to conventional microfinance as a step of teamwork. To maximize their impact, Islamic microfinance institution should utilize risk-sharing principles both in raising funds and distributing loans to their borrowers, such as credit guarantee scheme. The last one, Islamic capital market can provide a unique avenue for Islamic microfinance institutions to raise capital funds based on risk-sharing principles. This can widen the focus of their fundraising efforts beyond institutional investors, structure innovative financial products and service.
Rebooting, reprioritizing, repurposing, resetting, recalibrating, and resilient were among the terms we heard. In previous roundtables, the topics of impact investing and blended finance were also explored. Given the strong congruence between the ideas of impact investing and Islamic principles, the SC is committed to strengthening the efficacy and creativity of the Islamic capital market as a market regulator, particularly in impact investing. Despite the difficulties and limits of deep dive adjustments in the current environment, we recently hosted an impact investment roundtable series to examine the role of issuers, investors, and intermediaries in building the impact investing area of the Islamic capital market. We see impact investing as a new virtuous asset class that is gaining popularity as people become more conscious of and committed to societal good. The impact investing segment should grow and strengthen according to our goals. The use of a mix of capital sources, including impact capital, is perfect for resolving the consensus raised during this impact investment roundtable series.
Critical efficient zakat need to support small and local entrepreneurs. Zakat institution for state that provide zakat assistance to asnaf or small traders and hawkers. There are differences in terms of classification under the category of asnaf. From the aspect of the form of assistance, some provide it in the form of financial assistance, such as capital, raw material capital, business equipment, some in the form of cost preparation and exemption for rental payment for business premise. Another critical reflection, the role of the OIC, Organization of Islamic Cooperation, in creating a unit of responsibility to create a new syllabus of helping people around the world, which is create a syllabus to standardize how to help the finance of people across to the country during a COVID pandemic, and also provide funds to help countries experiencing persistent financial problems and the most affected during a pandemic. Lastly, critical reflection, which is develop an apps to make investment, which is make an investment under the concept of Islam and under the Sharia, so as not to engage in wrongful transaction. And from there, investor Islamic equity fund expect a high level of transparency, and for the investor, the advantage of investing in Sharia funds unique over investing in fixed term investment is easy liquidity.